Hello everyone. Before we start with the video, I want to say a couple of things. I am not a financial planner nor a financial advisor. I'm not FCA approved. I'm not approved by any institution that allows me to give financial advices. Nothing mentioned in the video should be considered as an investment advice nor guidance. Everything showed, talked, and explained is for pure and only educational purposes. The risk is in your own hands, and I always recommend trading on them accounts as that's literally the only way to not lose money in this market. Enjoy the video. Okay, so let's do the commented back testing. That's where we are. Let's go somewhere back. I don't want to go too far though, because what's this? 14. Let's check. 14. It's not the one. Week 13. 14 is Monday. That's good then. Let's begin on a Monday then. 14. Let's do from 6 a.m. Oh, 5. Oh, yeah, 6 a.m. We have a lot of range in the 1 hour. I don't really like drawing areas when we have somewhat of a range. We even broke this low here, so not much to really do. Yeah, not gonna be drawing any areas. Now we could draw as an example what we have here, just somewhat of a range before this break that we have here in the 1 hour. So that works pretty well, and I think that's all. Let's see, 1 minute, it's 6 a.m. Yeah. Okay, so that's the 1 hour order block, range, whatever you want to call that. And let's see what we have. Clearly pushing lower, of course. Have a lot of liquidity here. Kind of leading towards this range. Not range, but liquidity. Sorry, order block that we have up there. So we will leave that for later. Do have some liquidity here leading towards this one, but I don't really like that area, and this is basically useless, so won't consider that. Am I recording well? Yes. Okay, so let's get on with it. A bit of a range. Okay, kind of heading higher. So what I have to be careful with also is we've clearly broken this high. We have yet to break this and yet to break this. To break, sorry. So having both of these areas in mind, even though we have the liquidity, we do have to keep in mind that price could easily react to this, right? So just wanted to say that in case price actually decides to react to that. Now what we see below is that we have flip. This is a break. So if I wanted to buy, I'd probably go for this pause. It's a little bit risky, as it's literally just one small, really small candle. That's what I would like to go for. If I was on this market, yeah, it doesn't really seem like it's reaching for it. I will draw it just in case price decides to come back. Why I stopped, I paused because we have a flip here, and that flip was caused by this candle that we have here. So that for me is an entry. We do have a pause a little bit before this candle that closes below the low, so we could consider that as our entry point, but I don't really like those kind of candles. Plus, let's say I want to place a trade right now. The entry should have been triggered already, right? And expecting price to do this. Instead, I expect price to do something like this and then continue to push lower. Do want to keep in mind that area, and I'm gonna go for the 50 on this one because we do have a pretty good area. Not gonna lie. Let's call that 25. Although we set 16s. Oh, that's actually 22 to be a lot. Keep in mind that my spreads are somewhere around 3, 4. It's not that high. So yeah. Okay, hold on. We were already triggered apparently. 5R. Okay, so the target is even pretty close to that other area. Could be looking for a DCE here. So what's the DCE? An RE, let me see if I can actually write here. Yeah. RE is risk entry, CE is confirmation entry, and DCE is double confirmation entry, and we could even use DCE or QCE, which is triple confirmation entry, which is basically as it sounds. So this is the risk entry. Then we have a flip. This is the confirmation entry. So on this area, the one that we are already in right now, and what we're about to witness, if this works out, of course, is the DCE. So we have a break. Why I haven't moved my stop loss anywhere, as we still have the opportunity for price to come to this order block and then continue to fall. So I wouldn't usually trade this as it is, right? I wouldn't actually trade a DCE if I'm inside of a trade. But let's just do it for the sake of the back testing to see how it works out. I don't really like the fact that it goes below that area, so let's do it like that. And yeah, let's see what it does. We were triggered there. We didn't break the lows. That's not a very good indication. Okay, now we do break it, and it's actually a target. Good. Okay, so that's 3.8 plus 5R, so that's 8.8R. I do have to keep in mind that it depends on the lot size a lot, how much am I actually going to be making. Of course, I'm always risking a 0.25%. So if I make 5R, it supposedly should be 1.25, but sometimes when I have a stop loss, say 4.5 or 4 pips of stop loss, that actually gives me a little bit over 1.5% profit. So having a 2.2 and a 2.5 is actually pretty close to the actual 1.25 in this case, and sorry, it doesn't actually get to 1. Well, close to 1, so we could call this a 0.9%. So it'd be 2.15%. Am I right? Yeah. Okay. So that's target for now. I do want to see what happens on this candle, if it's respected, and apparently it is. That's a pretty good area. It's a little bit risky. I don't really like taking those kind of pauses. If we had a range or something here that basically happened before this major break, then I will definitely go for that. Something like this, but here. But as it is just one candle, I'm not really interested into basically doing that. Okay. So we do have the flip now, so I could be going for the DCE here. That's what I'm going to be looking for. Actually, let me... no, let's leave it like that now. For now, we'll do that later. My entry is going to be... I don't really like the high in this case, but don't really have a choice. Let's go for 30 on this one, 150. We do have the area that we drew. This is our 1 hour order block. This is another area that still looks of interest for me, as we do have the liquidity there and the liquidity that we're forming right now. So targeting that area could actually be a pretty good opportunity or a pretty good idea per se. But I prefer doing the 5R unless I don't know. It depends a lot, because we do have some areas price could easily just do something like this, take the liquidity and then fall without actually mitigating that area. So yeah, it's just like that. I prefer to go for something more conservative, as it is this 5R. So the fact that it actually pulled away that much already makes me not want to take this trade. We could have gone for this range. As you can see, it does mitigate it, but it does have liquidity. It's a pretty good range. As you can see, it ranges right before breaking this major structure. So it's like it's taken, as I've said, it's taken a little bit of a breath to then actually cause the break or the movement that it wants to cause, and then price comes back to mitigate that and continue to go higher. So I could have an entry. What we could actually do now is go for this as a continuation type of pattern. And let's see if we actually get triggered. I'm going to go with the open stop loss just below that structure. But yeah, not mitigated. Okay. We are respecting. We do nick the high. That doesn't mean that much, as it could be easily reacting to this area. So not really scared for that. I don't want to take a confirmation entry right now. We should be considering the buys still, as we are not confirmed to be selling. This area, as you can see, is kind of being respected, and we are creating liquidity. So we could go for something in here. Not liking it that much. We could go for something like this, considering the week of this candle, but the high of that one. So going for the, well, actually could go for below those lows that actually look pretty clean. I don't like this sell this buy, sorry, that much. I'm going to actually go here because I do have to consider the spreads on the buys, and that's 20 going for 100. So basically, this trade, I see it as a very risky trade, as we are respecting a bearish area inside of a very short block, of a very higher time frame order block. So that's a very risky trade. But as it is even below of the high of the structure, this does look like a pretty good opportunity, as somewhat of a scale opportunity. Scalping opportunity, sorry, not scale. At this point, we are creating liquidity. We do have somewhat of equal highs there, so I'm not that scared. And that's a loss. Yeah, it's a shame. Still, I do think the trade is good. So we do have some really good confluences. But yeah, we weren't able to break this high, so that already gave us a lot. So yeah, okay, so let's see what happens now. At this point, we have a flip, so we should be waiting for somewhat of a break. It even created more liquidity. So as an example, at this point, what we could be doing is taking a confirmation entry here, as we have caused a flip after tapping into a pretty good area. We could also consider the area just this to make it a little bit cleaner. And all of this just liquidity. So that's a pretty good way to view it, right? But also, so actually, we have this. Prices reacting to that. So let's actually do the next. We're going to be taking this confirmation entry. Going to go on the 25 or the open. The 25. Let's go for the 25. Yeah, let's not risk it. I really want to go for the 50% of the area, as it does look like pretty good tone and everything. And at the same time, I do want to take the sell that we have up here, as it does have a lot of liquidity. We'll see what happens when price reaches this area, as we could basically close this trade early to ensure some profits and basically then continue with the sell. But at the same time, that does carry some risks, as it could basically just, tag me out of the sell, sorry, and then tag me out of the buy, or vice versa. So we're triggered. I don't like the string on that. I do like the string on that. Okay. So we started well. We continue well. We nicked the high. I am considering if I should keep the sell. I'm not actually going to keep the sell, no. Let's continue with this buy. My stop loss is going to be basically here, so I take somewhat of a break even, but it'll be actually a little bit of a loss due to commissions and everything. And it respected the sell for now. And okay, that's target. Good. It did respect the sell for a little bit. I didn't like the fact that we had a lot of strength from the downside, so we could be expecting somewhat of a bullish continuation. So that's why I decided to keep the buy and not the sell. But that actually worked out pretty well. This is 5R. Let me actually do it with the text. 5R, which is 1.25. It's actually 1.20, something like that. I kind of remember these numbers just off my head. Let's see if it respects the order block to just delete it or not. Have a pause there. I love pauses. I've seen GBP dollar really respect them. Not the case, as an example. But yeah. Let's actually let it move a little bit. Nick the high. I'm already done with that order block. We do have somewhat of a range, but it does look like it has liquidity. I don't really want to trade anything right now. Okay, so we have a flip. Now we're kind of mitigating that high. Let's see if we actually cause somewhat of a break. Liquidity. No, we could actually be looking for a buy now, as this is somewhat of a complex pullback. We have a break. We make another complex pullback. A range takes liquidity. The only thing that kind of scares me is the liquidity that we have here. Sorry, not this one, but as an example, this candle is considered a sponsored candle as it basically took liquidity. Now we do have liquidity here, so as an example, if we went to the 15 seconds time frame, I don't think I can because it'll just kick me back to the present basically. There might be somewhat of an area here that we could actually go for and could work out pretty well, but I don't want to do that. I don't like the pause either. I mean, I do like the pause, but I don't like the possibilities on this trade for now. So sell is kind of being respected. We do have somewhat of liquidity. It did break all of this. Kind of reacting to this order block right now, isn't it? Yeah. So hold on. Did we break? No, we do have liquidity. Are we reacting to something? We kind of are. I don't want to take this as a confirmation entry or risk entry for now. Let's just let price play a little bit. You have somewhat of a range. A lot of liquidity below. Do like the opportunity of this candle just doing something like this and then continue to fall, but I won't be trading that. Yeah. Okay, so we are reacting to the high now. We have caused a flip, if we consider that a flip. So let's see what we could actually get from this. From the buys, we ranged a lot here. Reason why I'm not quite looking for buys right now. This is a lot of liquidity, and I do consider all of this as liquidity too, right? So that's all liquidity for me. What we could consider also is this pretty good area. Let's just call it the whole thing, as it does have all of that liquidity, so price could easily react to that. But for now, I will be taking this as a sell on the 50%, somewhere around there. Stop loss above this high, although we could consider that 50% of this whole area, so I'm actually going to go with 30, 150. Don't like that the fact that it actually goes below that area, but not much to really do there. Let's see what price does. Respects the area for now. I don't really like that beginning though. So that's good, but it's not that good. As we did break again, I want to move my stop loss here, so that's half a loss in case it does go against me, right? And yeah, that's a loss. So we're not quite reacting to much right now, so I'm not really interested into taking a buy for now. Oh, it's actually 12 almost. I don't want to trade past 12, as I don't trade past 12. Let's actually see if the sell was respected, and it actually was. So let's actually show this, which is a little bit of psychology, because at this point I don't actually move my stop loss or break even. That's not something that I do, nor should I move my stop loss to basically a little bit of a less of a loss, right? So in this case, if we would have actually kept that stop loss, we would have been close to take profit apparently, but not actually hit take profit. I mean, at some point I would have closed it for sure, maybe 1 p.m. somewhere around there. But yeah, I would have moved my stop loss to break even there. So yeah, would have been a better result than his stop loss. Yeah, it is what it is. So let's open the calculator. It's not really that necessary. Let's do a quick notes somewhere around here. Okay, a little bit of timings on the video apparently. So okay, so this is Monday, right? Monday 13th. Monday 14th. We have to take profits down there, so that's a 2.15% up. Then we have a loss of 0.25 down and 1.20% up. And then we have half a loss, so that's 0.15. Let's call it 0. So it's basically 3, right? If we basically take this 15 with this one and this 20, sorry, this 25 with this one, it's a little bit less than 3, 2.95% up. Okay, so that's Monday. Let's continue now to Tuesday. Let's delete all of this. I don't really want it. Let's go to the 1 hour. Let's actually draw the areas. Had liquidity there, so that's good. Where did the day begin though? Here. Okay, so this is what we did. Basically just push higher. So we're gonna go now to the 15th, 5 a.m. Sorry, 6 a.m. as we did just a second ago, and that'll be it. Yes, we go down to the 1 minute. So let's actually check the 1 hour just for a second. And we did cause a flip here as this low broke this low, so this is our new lower high. Yeah, lower high. And now we've broken that, so this is our new higher high. We expect a higher low and then a continuation to the upside. So we could be expecting buys on the higher time frames, right? But we'll see. As you know, I don't really use the higher time frames that much. I have started using them actually a little bit, but yeah, I just don't find that much on them. So actually do something like this. I don't know, I actually got a new monitor just a few days ago, and yeah, kind of getting used to it. So let's see. So it's a flip. That's another flip. Actually, we've mitigated this pause, right? So we can easily go for this now. So the high will be this one, and the low will be that. The entry will be on 25%. So I should do it closer. I don't know where it'll mitigate it. And that'll be, let's call it 26, going for 130. And that's our entry for now. We'll see what happens. At the same time, we can easily consider this as a flip. This is a flip. B2S, not S2D. Flip. This is now our break. And the thing here is that we have liquidity, right? And what's the trick here? So when we have liquidity, the issue is that price could easily react to this area, right? Not even taking that liquidity, just do something like this. And at the same time, it could just, let's say, go a little bit higher, take the liquidity, mitigate as an example this range, and then continue to go higher, right? So those are the two options that we have right now. I think it's a little bit risky to actually go for the higher area. We could go for the higher area, just in the stop loss maybe below this area, but that will be a pretty high stop loss, and that's not quite what I like to do. So what we'll do is go for this. Let's actually go for 25. My stop loss will be, of course, below of this week that we have right here. So that's 21. Let's add it 4, sorry, and target 125. Right. So we have the sell, we have the buy. Let's see what happens. It came right away. I didn't really expect it to come that fast towards that area. So I was considering closing that sell, as it did react well, but it's a little bit late, so let's just say we take it. That's a loss, sadly. This could be a continuation right there. Thus create liquidity. And that would actually be a big given. That's actually so we're creating equal lows there though. I was about to close it, not gonna lie, because somewhere around this area, right, at this level of a trade, I'm already at a 1-to-1, so closing there would have basically gotten me back to break even for the day. But I don't really want to do that. So let's delete this. This is a stop loss. As I said, I did want to delete it, but as when I said it, it was basically already triggered. I didn't want to sound like a liar or something like that, so let's just go for this. So why am I still inside of this buy? Let's actually do the numbers. Not the numbers, but basically we have this, right? So this has caused this major break, right? We could consider this as our major pause before that major break. Or we could consider just extreme, and basically as an example right now, price is kind of respecting that. So that's why for now I do want to keep on to that buy, right? But what do we have too? We have a flip here, and we actually have to break that to cause a break. So I'm actually just going to keep this buy. I could be taking a 50% entry here. So let's just actually do that. I'm going to risk half of my usual risk. So that'll be 0.15. but let's see what price decides to do, and that basically is already over. Okay, so as a take profit onto this one, this is 5R, nothing more than that. 5R, 1.25, let's call it. Just like that, it did leave liquidity, so later price could come back to that area and do something. But for now, let's just ignore it. Although now we could create an entry, but I don't really like it now. Okay, so what do we have? Price has flipped from this point, so let's check where it reacted to. We could say that this is a pretty good area. I don't really think so, because it doesn't really cost much. We're kind of respecting that low there. So for now, don't really want to look for sells, although unless we actually get more confluences. Breaks that low. Ooh, okay. I really hate when price actually does this. I mean, if we're inside of a trade, well, then great, right? But of course that goes in this direction, right? But you know, it's just really messy. Okay, so let's check this. We have a flip from basically this point, or we could even consider it this high that we have here. Sorry, that's an S2D. S2D. Okay, that was caused, we could call it by this range or this pause. I like better this pause because it does cause this break later. Although the break did happen a little bit earlier. But yeah, this is the area that I actually like. So yeah, I would go for this. Now the thing is that we only have one flip. We could consider this a break, but that's a substructure break. So don't really want to risk it onto that one. And price did pull away a lot, not gonna lie. Okay. Here is where details come in order. This is a break, so this is our high, or low, sorry. This low gets broken by this high. Let's see what happens next. We next break this, so this is our new low. It respected that, so we're kind of respecting this. So that now, if we break this high, we could be taking something here, right? Although I'd probably go for something like this. So let's see if we break that, and if it doesn't mitigate, well, then already mitigated it. Fuck. Well, now we have liquidity here, so this range actually looks really good. I'm looking for buys because of this. We have such a strong movement that this area is going to cost nothing. This is going to cost nothing, although this area did cause a major break, flips, and everything. So this area is example is something that I would like to be careful with. And the area that I mostly want to be out of the buys, if I take a buy, let's say here, I want to be out before this range comes, right? Comes in play. This range is a pretty good range, not gonna lie, clean range, just before major break and flips and everything. So that does look good, but anything else, this is just, for me, it's just a gap. So price has to basically correct and either respect the high, respect some area in the middle, and then continue to push lower, or break above the high and basically continue with a new trend, right? So that's what I'm basically expecting. For now, even though we haven't broken the high, I do kind of want to take this. So I'm going to go for a trade on the 25. I would actually go for the 50%, but since the buys actually have a pretty large spread, I fear that I could not be triggered, right? Let me see that I'm actually recording this. Yeah, okay. So let's see what happens. It breaks the high, so that's a pretty good indication. I don't like the fact that this is what actually broke the high. I could be going for both, but I don't like going for two trades, as it does could be twice the loss. That's not really necessary. We could wait for another confirmation, right? We could wait for something like this. Price comes into this area, basically rechecks, and then we enter on this one. But that's looking for a lot. We have a lot of equal lows there. You know what? I'm gonna take both. Right, we're back testing. Let's take both. If I was actually trading, depending on the day, we have taken a win already, so maybe I would risk both of them. as we started well, but it's example if I started with a loss or if I started with missing out on trades, I probably would have actually gone for just the extreme, as the extreme is what I consider not the best area, but basically if you have two areas where price could easily react, if you go for the higher one, you can easily get triggered out, right? So stop that, sorry. If you go for the extreme, you might not get triggered, right? Price could easily react to this and then continue to go higher. But the thing with the extreme is that if price actually breaks that area, then you were actually wrong, right? You were wrong. If price breaks this area, will you still have the opportunity to actually break onto that one and basically then continue to go higher. So in this case, I'm going to take both, but I probably wouldn't do that on a actual trading day. But I did have a profit, so I don't know. Can't really say for sure. It's a good start. So example, this is the trade that I was actually talking about. This is what we could actually go for now, right here. This DCE or CE. I don't really keep up with the numbers. So yeah, at that point, this entry is deleted. Pretty good trade. Let's see if it hits target or not. Taking a little bit too much. Credit liquidity, so I'm not really scared of that. So yeah, let's take profit. Now we should continue to analyze as you can see, this area did nothing. This either, and well, I don't think this one is going to work. We could see this one working out as we could consider it as coming from a major area, right? So let's see. I do really much like this pause, which is the cause to basically the break of this somewhat of a range or complex pullback. So that's a pretty good area. I don't think price will come back right away, but apparently it might. I forgot to put the notes with 3. Let's just call it 1.25. How much do we have here? 2.5. That's probably 1.20, not 1.25. It's by far. Let's call it 1.20. Let's be a little bit precise with that. So what I was actually expecting is for price to do something like this, go a little bit higher, and then come into this area to continue to go higher, right? But now that it's coming back pretty fast, not really liking it, but I'm actually going to go for it. Now, we don't get profits unless we actually risk it. So let's fucking go for it. Let's go for 25. It's a little bit risky as we're talking about 2 ticks of spread, as it's usually 3 or 2 on my broker. And yeah, that actually moved higher pretty easily. How long? Because we actually might have a sell. We do have a sell. Okay. So I'm interested on the buy here, but we don't have that much confluences, although this is a pretty good low that we can consider liquidity. We are reacting to this extreme, this whole range that we have there. We reacted to the 50. We got a flip here. So this extreme area is an entry right now for me, so I'm actually going to go for it. We even created somewhat of equal highs there, sorry. And I'm actually going to go for 25. Keep in mind that the sells do have a pretty tight spread. So if I place it on 25 and price actually hits the 25 by just 1 tick above, that's more than enough for me to be triggered. So okay, so that's pretty good actually. Those equal lows are pretty, well, they're not equal lows actually, but they're actually really good in my opinion. Okay, so I'm triggered in 5R. Okay, so let's leave it like that. Now the buy could easily work out, the sell could easily not work out, of course, but we'll see what happens liquidity wise. Okay, we actually break that. That's a loss. I really thought it was actually going to work, not gonna lie. I want to go for this, right? Is that the first? No, the second loss. Okay, I want to go for this. We're really approaching the around 11:30, 12. I'm not really trading anymore. Just watching, just seeing opportunities and everything. I'm actually going to go for this on the open. I do like the opportunity very much. So let's call it 35, going for 175. And, well, I gotta see what actually triggers us. That's more equal lows. That's more liquidity for me. Now, The fact that I actually broke that high doesn't give me that much confidence on this trade, but I'm still going for it as it does have a lot of liquidity. We have caused a flip. We do have to still analyze the trade even though we have placed a trade. So we could be looking for somewhat of a sell. Did we react to something? Nah. Now the thing is that so I still have the trade placed. This is 11:30. The trade is placed. At this point, I would probably leave the trade. Leave a couple of alarms, as an example, somewhere around here when we break this high. I would like to come back and watch the charts to see if it actually gives a DCE, right, or a CE, a CE in this case. So that could be one of the alarms, another alarm on the stop loss, and another on the target, right? And probably something higher to just, but that's actually set up later for when I actually see that price actually reacting. All that talk depending if we actually go higher, right? Because if we don't, then it was a lot. There's a lot of liquidity lower. Well, we took it, and okay. So let's say, what do we have? We have liquidity there that we've taken. I'm not really liking the buys right now, even though we have reacted pretty well to them. We created liquidity down here, price took it, and then started to go higher. So at this point, as an example, if I saw what price was actually doing, as you can see, this is when I see that price actually broke the high. So that's actually when I come back to the markets and I see that this is the potential DCE. So I can't really move my stop loss that much. So let's just leave it where it is. Let's just see what price actually does for a little bit. And at this point, my stop loss is a break even. Why? Because usually I wouldn't actually move it. It doesn't make that much sense. But at this point of the day, I just want to get out of the markets, right? I just want to be out for the day. Have done enough. So my stop loss is there. I'm going to 1 to a 4 risk to reward ratio. Let me actually open the spread calculator to tell you exactly how much and why am I actually going for that 4R instead of 5R. And we have 3.5 pips of stop loss, so that indicates that we have to use 1.79 lot size, and the target will give me $300. We're talking about a 25k demo account, right? So 1% is 2,000. Sorry, how much is a 1%? 250. And we're talking about 300. So that's basically 1.25, 1.30. So basically, taking 1R out is actually a pretty good target, right? So here it is, 3.5R. Oops. Okay, 3.5R. You can see it here. 1.79 lot size. The actual 5R net, right? So that's basically a target, right? So I'm going to for those 5R. I will actually like to go here, right? As price could easily just react to this, to the open of that, and they continue to fall. But my stop loss at break even at this point, so I don't really care, and that actually takes me out. So if we would have gone for that at 175, was it? That would have been a target. A little bit of a lot of trouble for not much, right? As it ended up going for the target, but still pretty good trade. So that's basically to stay, right? Yeah. Okay. So let's check onto this one. Have to stay. Check it out. We have one loss. I should do it here. 0.25 minus 0.25 minus. I'm just counting the losses first, and then we have 1.20 up, 1.25 up, and 1 up, basically. So that's minus 50, so we could call it 3 and 2.95 again, right? So let me actually do it with the calculator because I might be fucking up here. Probably shouldn't be doing this on the video. Doesn't make that much sense, but don't want to really do cuts or anything like that. So that's 1.20 plus 1.25 plus 1, 3.45 minus 0.50. Yeah, 295. Okay. So 295 and 295, we're talking about how much is it? So 5.80, 90. on just 2 days. So that's a pretty good start for the week. Probably at this point, if I had actually had such an amazing week, I would probably just, the rest of the week, just maybe trade very little or trade with a real account or just basically not trade with the funded. I don't really see the risk on that, the need to risk on that, basically. So yeah, so we were on the 15th, right? Yeah, let's go to the 16th to 5 a.m. There it is. So it broke that high, but we can still consider this the whole order block, right? We'll see what happens. 5 a.m. Yeah, that's good. So what we can actually do, as we are inside of a 1 hour order block, is go for whatever it actually reacted to and see what we can actually find out. So we have, hold on, because I don't actually have this beautiful tool, my opinion, just this one. We said it reacted to this, right? It seems the most likely, as it took all of that liquidity and everything. One there and the other one there. Was that the one? Yeah, okay. So reacted to that, we caused a flip here. Price came back, mitigated that. So let's delete this. It's actually worthless now. So what I was trying to show is this. We have a flip. So if we would have realized why did this flip, we have this trade beautifully right there. If we will be using the higher time frames and would have actually caught that trade, we could have easily gone for this at the very least, and could even gone higher towards this area that we have there. Maybe giving out a 100R depending on the stop loss on this one. So yeah, let's just do what we do. Have a lot of liquidity there. So the other day actually happened something like this, where we had, I don't think we actually had liquidity, but the thing was that we actually had a pause before a major break, and above that pause, another pause, right? So what I most of the times do in these cases, it depends on how long is the break, right? Because sometimes, let's say you have a high like this, right? You have this pause and the break, and then you have a pause like this, and the break does that. So this could be a cause to that break, so we could actually go for this. But as it doesn't retrace that much, it actually goes for the second pause, right? So it really depends a lot. As an example, if I actually want to trade something, I would actually really like going for this one, as we do have the liquidity right next to that. But this pause does look like it actually took a lot more compared to this one. As you can see, this one actually doesn't break the low until here, and we could call the cause that one. So yeah, I'm not going to take a risk entry or anything on neither of them, but I will leave both of them drawn to see what happens when price actually comes back to them. So we have liquidity, so this is no trade for me, and let's see what happens next. Okay, that's a pretty good sell, not gonna lie. Kind of missed out on that. I want to take that continuation. Yeah, no, more liquidity toward that higher area. We are entering there, and we have respected something, which was the higher one in this case. That's good. And we could actually, if we look at it further, we could say that these are equal highs, right? All of those highs. Somewhat of a resistance or support. But yeah, doesn't look like it's going to hold that much. So also, before I actually forget, this is a flip, and this is a break. So at that point, we could be already looking for a buy. What I don't like about this structure is the candle that we actually should be going for is huge, right? But we do have to consider it just in case price actually comes back to that and causes somewhat of a flip, and that could be an actually pretty good entry. Okay, so it actually broke. So why I said I actually didn't think it was going to hold that much is because the move started pretty well, but then started to range a lot. A lot. And we were already having some confluences towards the buy side. So yeah, so we have somewhat of, there was a pattern I learned once. It was something like this, price does that, and then continues to go higher. It was actually called a cup of tea or something like that. Pretty funny name, not gonna lie, but yeah. Okay, so we have to keep in mind where we are reacting to, right? We have caused a flip right now, so we're reacting to this. This comes from mitigation, major flip, comes from a major area. So this is a trade. I do not know if this will work or anything, of course, but this is a trade for sure. I do not want to miss out on something like this. Let's put it there. Because so the thing is that we come from mitigating a 1 minute order block that we have inside of a 1 hour order block. We cause a flip, we mitigate something, so that comes from mitigation, comes from another mitigation from a pretty important area in my opinion. So that really gives out a lot on this trade. So that would be 23 and 3 I said, and 115. It actually correlates with this area, so that's actually pretty good. We could be going for the 50, but I don't really like it. Oh, we're actually already in. Okay. Then expect price to do that rapidly. Okay, so we are inside of this sell. Pretty good sell in my opinion. Of course, doesn't mean that it'll work out, but you know how it works. That's not it. I said flip. Did I misclick again? Okay. Not the greatest beginning. We're creating a lot of liquidity, so let's actually say I missed out on this first entry that we have here, right? And we were then created all of this liquidity. I would actually go for the 50, right? Because if I would have been present for the first trade, but I just didn't trade it because of whatever reason there is, and I see that there's a lot of liquidity being created, I would definitely go for the 50% because I know that if I would have been present for this move, I would have taken the risk. So the loss or the win should have actually been there, should have been counted, or however you want to count that. So basically all of this liquidity is on entry to 50% right there. Could be pretty good. Even if you are pretty aggressive or you're not risking that much, you could definitely just put a scale in here, then continue to push lower. But that's not quite my trading way, so yeah. They begin well, so this is something to notice, right? We have a flip. Now we have a break, and look at what happened. So let me hide this too. Can I do that without basically just ruining the whole thing? Let me actually do it like this. Oh no, what is this? Okay, why is it like this? Oh no. Okay, well that sucks. Oh, there's probably a way to fix it, but for now, I'm not gonna do that. I'm not trying to fix it. So this is the trade, right? So trade. Let's just call it trade. I went ahead it for just a second, but I really wanted to have them as close as possible. I guess that'll work, right? No, disappears. Okay. So here's the thing. We cause a flip after mitigating a pretty important area. What do we do later? We create a lot of liquidity. As you can see, so this is a high, this is a low, this is a higher high, this is a lower low, that's why that's a flip. This is a flip right here. We then have actually this wick chest right here. That's a high, a lower high, that's a lower low. So at this point, this is our low, the low that we have to break basically, right? Then we start to range between this high and this low, right? Have range, a lot of liquidity. And what can we expect to happen? Price to take that liquidity, which is what I was actually talking about at the beginning. And the entry, so this candle, as I was talking about earlier, sorry, this is a sponsored candle because it took liquidity. Okay, so we had pretty clean liquidity here, a lot of liquidity in my opinion, even all of this basically just liquidity. Comes up, takes it, falls. Simple as that. We could even say it took liquidity on the downside too. So not only that, but it's also the cost to the break, right? So that's already even more confluence. So that could have been a scaling opportunity, right? Object tree, okay. So that's a scaling opportunity, not my way of trading, but even this right here could be another entry. But as I said, not my way of trading. So let's see what happens. Price actually respected that, then broke. I'm not really liking the fact that it's taking a lot of time to actually get down there. It is kind of reacting to this range, but it broke this low, so I don't know. Let's just let it play out. I should probably have my stop loss to break even at this point. Let's actually move it here. above this area. If it breaks the high, then didn't break it, but it'll break it. Yeah. Okay. So I'm out for little loss. We could say this. What if it's 0.1, maybe even little percent loss. Maybe even less. If we would have gone for the 50%, right, something like that. Stop loss is basically a 15, and we would have gone for 75. That would have been definitely target, but it is what it is. So yeah. Okay. So let's see what we actually missed out on, because we probably should have continued to analyze this. We still have the opportunity that price could easily respect this, right? As it did create equal highs, it created equal highs here, so that's probably a pretty good trade that is happening right now. If we have a flip here, we could be going for this, or maybe even the pause before that. I do like the fact that we have created liquidity towards this area that we have down here. Not that I want to take a risk entry unless we actually have liquidity right above that area. But for now, we'll just let it be. You know, I wasn't going to take a buy probably, but I was going to say that we had somewhat of an opportunity. Okay, so we range, we break, cost to that break, that major break in this case. It's probably an entry, and as you can see, we even had liquidity here that price takes to mitigate that. We also could consider this as liquidity, so yeah, that's why I said probably wasn't going to actually take that. But yeah, it's good to just save them sometimes, you know, not always. So we could say that we flipped here, we could say that we broke here, but I don't really like the structure, so I'm just going to be patient in this case. Could be going for a DCE from this point, but I'm not really interested into doing that. As you can see, it did nick the low, created more liquidity towards this range, but I'm not really liking that range for now. We did break here, sorry. So this could have been an entry, but it has a lot of liquidity. Reason why I'm not quite trading this right now. Okay, let's draw the liquidity that we have towards this area that we have down here. Because if it gets to a point where we have a shit ton of liquidity, then that changes all, you know, it's just... I mean, a good is to just go to this lower range and react, right, to that liquidity and everything, but I don't know. We could be looking for a sell here, but as I said, we have a lot of liquidity, so in this case, actually the best thing to actually do is to go for this. Sorry for the noise that is about to happen. There you go. So all of that liquidity that we could take on the 25, let's see what price actually does, and we could actually decide. Yeah, I'm going to go for it. Have we traded anything this day? No, actually not, except for that loss, of course. So I should go for this, yeah, definitely. Don't really like it, and we could actually react to that high up there. That's another issue that we have currently, but we'll actually go for this. Let's call it 30 in this case, 150. Target within the range, good. So yeah, let's just see what happens. That's manipulation, although at the same time it does look like it's already reacting to something. Took a little bit of liquidity, reacted to this area. Could be taking a DCE here, right there, right, on this order block, but I'm not really interested. We took that liquidity, and at this point I think I don't want to trade anymore. Yeah, no, that's not. So we're tapping into this area. I mean, it's just an area. Might not work out, but I do want to see what it does from that point. Could be looking for the sell too, actually, and we probably should be already inside of that. So we are creating a little bit of liquidity, and we do have this pause, but it didn't mitigate the pause, and that pause didn't really cause anything. Yeah, no, it's not a sell for now, to be honest. So we haven't broken the high. We're kind of reacting to sell. I do see some liquidity forming here, so that could be actually a buy. Risky buy for now. Let's actually see if we break that or not. The buy was already mitigated. Yeah, okay. So as you can see, it even created even more liquidity. Could have considered that. So yeah, for now, just gotta wait for some new structure. That's a shame. I thought about taking that, but I don't know. It just looked too risky, to be honest. So we flipped, we broke. We could actually say this was our flip, this was our broke, so this could be actually our entry, so I kind of missed out on that. I kind of want to take onto this, but we are reacting very strongly to the buys, to the sells, sorry. So this buy right here could be a pretty good buy. As the sell, we missed out on this sell. So I said this is our flip, this is our break. So the cost is literally the only thing we can actually go for, which is this whole thing, right? So yeah, I mean, that could have an entry. We could be inside of a pretty good entry for now. We'll see what it does. We have this buy for now. That's a good start. Now, what we could actually do also is go for this. But I don't know. I just don't like the fact that it basically ranged. Now it's getting lower. Would have preferred something like this. A little bit stronger. As you can see, I don't know. I just don't know how to explain it, but I like it when it actually goes a little bit stronger to the direction that it wants to do. Took liquidity, and I think it's a loss, actually. Yeah, that's definitely a loss. That's a shame. So we probably was going to go for 25, so I actually would have been missed out, most likely. What time is it? It's actually 12 already, so that's over for me. We do break here, so it could have been taken that buy. That sell, sorry. But at the same time, it's just, it doesn't make that much sense, to be honest. So I kind of missed out on a couple of really good opportunities. If we actually check closely, we do react to this. That caused somewhat of a movement. So we actually, after this flip, we could have been taking some opportunities. So you can see it doesn't actually get to the extreme. So I might would have missed out on this sell that we have here. But I shouldn't have missed out on this one, which I think at this point we will be out for a break even already. A take profit, sorry. So that's 12. We could call it 16 to be good. And yeah, I would have been a really good target. And actually would have been a target before this trade. Actually would have been a really good trade, not gonna lie. And that's basically it. So the buy, I think the key buy was here. But as I said, we hadn't actually cost a flip for me to actually go for that. We did have liquidity, which was a pretty good area, which was a pretty good indication. But at the same time, this is just somewhat of a pause there in the middle of nowhere. It does cause some really good movement, takes liquidity, and basically later does cause the break of this area. But it's just not that important to just consider a risk entry on it, right? So it's basically Wednesday. How much are we going? 56 minutes. I think that's basically all. Let's see. Wednesday was a loss. Wednesday, yeah. Okay, so we have 0.25 minus here, 0.25, and I think I have a lower one, don't I? No. But I do have one more loss, don't I? No, it's only 2 losses. Okay, I actually thought there were more than that. So basically a minus 0.15% minus. So for this 3 days, we are already, how much do we say was the last one? 590 minus 50, so 5.4% profit up. I think we missed out on a couple of key trades. Well, not a couple. I think this was just the only one that actually made a lot of sense. This one, as I said, was a little bit risky as we didn't have enough confluences to just go for that. As it's not a range that took liquidity, that it's on a key area or something like that. If you told me that it was something like this, let's say we have this structure, we have a range here, and we had somewhat of a major structure there, right? And directly that pause caused this flip and took basically all of the highest, and definitely, potentially, not definitely, could have taken that buy. But yeah, I mean, just for me, sometimes it depends a lot. I don't do just the technicals, although that's probably the best to do. Just go with the technicals, but yeah. That's a shame. I really did like this buy, this sell, sorry. Could have worked out great. We do have a pause here, breaks. Yeah. Okay, so I think that's basically all. I think an hour back testing is a lot. Really tired, to be honest. I actually wasn't going to do it on this weekend, as I actually didn't have enough time to do a lot of other things that I actually had to do this weekend. But I did want to backtest, and I said, what the hell, just let's do it with the commentary, upload it for the guys and everything. So yeah, that's pretty much it, guys. Hope you enjoyed, and yeah, goodbye.